Hi, I'm Renee Dunnigan, and on behalf of the team at Grand Avenue Brokers, at A Better Way Realty, and A Better Way Funding, I'd like to welcome you to our page regarding lease option financing for assisted living facilities and group homes. I'm going to go over just a few things that'll help you understand how we operate and what is necessary in order to utilize a lease option with A Better Way Funding. First, I want to go over some of the benefits. So, why you should consider a Better Way lease option program. So, one of the biggest things is it's less money down than obtaining a bank loan. So, we'll go over the numbers in just a moment, but I'm just going to go over the bullet points here. Our programs serve as a bridge to ownership. So, typically, someone who has not owned and operated their own RAL or group home before, this is a great option. Of course, there's some need for education, and we will discuss that in your consultation. Utilizing our program will bolster securing a future bank loan. So, let's say you wanted to do an SBA loan. This will show experience and give you um, the experience necessary in order to qualify for that. You'll gain experience as the person in charge. You can improve the operation and have sweat equity to show the bank, and you'll fix the price in the future today. You'll have flexible time to exercise your option to buy. Within 3 to 5 years, you can exercise that. And if you need capital to expand or to improve the property, then our program can work for you. So I'm going to go ahead and go down here. We're on EasyRalFunding.com. Again, like I said, here's some of the benefits: conventional lender, small business administration, and A Better Way Funding. We're going to compare these. And as you can see, uh, I'm just going to talk about the benefits here with doing A Better Way Funding, and then I'll give you some of the trade-offs. So, quick decision. You can have low down payment. Great credit isn't necessary. Depending on your deal structure, your experience, a few things, there's potential for 0% down. You can have additional money for build out, and we will actually fund 100% of your deal plus some money if you needed to do, let's say, sprinklers or something like that. You have a flexible timeline. Like I said, you don't have to have had your own RAL before, and you'll have a fixed purchase price. So I'm going to skip this, but basically, we're going to go down here to this example. Let's, for easy math sake, we're going to say a 10 private room property that is found for $1 million. Now, I'm going to address this 10 private room property. We don't like to do deals with anything less than 10 beds. It doesn't have to be 10 rooms, it has to be 10 beds or more. The reason is people, for some reason, tend to leave in threes. So you can imagine if you have 6 or 8, let's just talk about 6. Like in California, a residential facility is considered 6 is the max. Now, if 3 leave, you can imagine you're in the red and you're going to have struggles paying for your bills. So we don't like to work with anything less than 10. So let's say our purchase price is $1 million. I'm going to give you the worst case scenarios here just for easy math sake, and so you can see the maximum. So we ask for a 7 to 10% fee. We'll go over what those fees include later when we have our consultation. But for now, I just want to help you understand the basic overview. So let's say maximum 10%, that would be $100,000. That is not what you need to come up with up front. That will be rolled into the life of the deal. So that puts us at $1.1 million. This is the portion you would need to come up with down in order to do the deal. So 5 to 10%, and you'll see these little asterisks down here. So for the fees, you can see fee varies depending on the deal structure, and your down payment depends on credit and experience. So let's say worst case scenario, we need to put down 10%. You would need to do that. So 110,000 is what you would need to put down. So that would put our balance back at $990,000. Now we do a 10% annual lease. So that's $99,000 per year. This does not go towards your purchase price. This is the lease. Your monthly rate If we divide the 99,000 into 12 monthly payments, would be 8,250 per month. So this is a triple net lease, which means the operator is responsible for all expenses, including taxes and insurance. Now, your option purchase price would be locked in at that 990,000. So as your property appreciates, you're going to be able to capitalize on that equity. That is yours to keep. So there's the trade-off. So while your lease payment does not go towards the purchase price, you are still gaining that equity. So it's sort of a balanced trade-off there. But I did want to talk about the trade-off back here. All of these benefits, you get all of these things, and the trade-off is, yes, your money is a little bit, it will cost you a little bit more for those. So you really have to decide, is it worth it? Now, um, we tend to have people come back over and over and over again because they expand their portfolio. The goal in, if you have gone through the RAL Academy, you understand the concept of the 3-pack. So let's say you only have your first RAL or you don't have a RAL yet, then obviously the idea, the best and highest good for your portfolio would be to grow to a minimum of 3 RALs. That's going to put you in the best position. So if you do that, then you'll see we have operators that have done this and they've come back over and over and over again and utilized our program. And obviously that is a great scenario. Some people, they exercise their option, they purchase their property out, and then they move on to the next and they use the program again for the next one. Or sometimes they use um, an SBA loan. So the choices are up to you, but I just wanted to give you an overview of how our program works, some of the key benefits and the trade-off for those benefits. And if you would like to learn more about what your personal situation would be like, again, 10% is the maximum. I will tell you this, if you are looking at using the lease option and you don't have, let's say if you look at a property in your area and you take whatever your purchase price is and you figure out what that 10% down would be, if you don't have that 10% either in savings assets or liquid assets, I would say, um, and you're looking to partner with somebody, that person would need to be a personal guarantor, meaning they would need to have income or assets that would guarantee the lease. Meaning, if for some crazy reason something went horribly wrong and you were unable to meet your commitment, then they would personally guarantee it. So it would be like them being a partner, financial partner. So if you're interested in learning more about what your particular situation would look like, I would encourage you to fill out this form. This is one of 3. This is basic contact information. It's going to ask you more about your RAL, if you have one picked out, things like that. Once you submit this, it'll ask you some more questions. So we hope to hear from you. We'll send you a calendar invite so that we can schedule your initial consultation, go over your particulars, and look at next steps. We hope that we get to work with you and hope you have a fantastic day.